Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the electronics sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The electronics sector of Indian share market comprises of companies involved in consumer electronics manufacturing, electronic components and semiconductors, mobile phones and assembly, industrial and defense electronics, power and energy electronics, and automation and IoT devices. The key growth drivers for this sector includes rising domestic consumption, mobile and semiconductor demand, Make in India push, global supply chain diversification, rise of EVs and smart devices, and defense modernization. The government supports the sector with policies like PLI scheme, semiconductor mission, electronics manufacturing clusters, digital India and smart city missions, and custom duty protection. The major challenges for this sector includes high import dependency, lack of semiconductor fab ecosystem, skill shortage, low R&D spend, infrastructural bottlenecks, and price sensitive market. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movements of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of one large cap, one mid cap, and eight small cap companies. The first graph that I will show will be the yearly returns graph, whereas the second will be the monthly returns graph. So let's jump into the yearly returns graph. This is the yearly returns graph. The green bars here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down at the bottom shows the cumulative returns. The green line shows number of months with positive returns and the red line shows number of months with negative returns. So in 2015, this sector gave very good returns of 69.56% with 9 positive months and only 3 negative months. But in 2016, the sector gave negative returns, in fact, with minus 10.82% with 6 positive months and 6 negative months. The situation improved in 2017 and the sector gave very good returns of 40.13% with 8 positive months and 4 negative months. But it followed by 2 years of negative returns. So 2018 gave negative returns of minus 11.35% with 8 negative months and only 4 positive months, whereas 2019 gave negative returns of minus 14.11% with 7 negative months and only 5 positive months. But the sector bounced back very well in 2020 with very good returns of 79.83% with 8 positive months and only 4 negative months. 2021 was a dream year for the sector, and the sector skyrocketed to 173.70% returns with 10 positive months and only 2 negative months. In 2022, the sector gave muted returns of 22.71% with 8 positive months and 4 negative months. 2023 again was a very good year for this sector as the sector managed to give returns of 121.73% in 2023 with 10 positive months and only 2 negative months. And 2024 again was a very good year for the sector, and the sector managed to give returns of 55.50% in that year with 8 positive months and only 4 negative months. So all in all, several see at least 5 years I can see which have given more than 50% returns, and couple of them have actually given more than 120% returns. So extremely good 10 years, and specifically last 5 years are extremely good. Let's see the cumulative returns. So follow this orange line over here, and we can see that 10 years cumulative returns is 3,259.49%, which is 33.5x in last 10 years. Let's see the cumulative, the key takeaways, which includes the cumulative return, which is 3259.49%, which is approximately 34x. Okay. CAGR, very impressive CAGR of 42.11%. Extremely impressive CAGR. Very good number. Net negative yearly returns 3, not the best, not the worst, but still 3 years with net negative yearly returns 2016, 2018, and 2019. Best year was 2021 with 173.70% returns, absolutely majestic returns. Worst year was 2019 with minus 14.11% returns. Positive to negative year ratio is 2.33 is to 1. Not again, not best, not worst, but still a bad number. Probably this and this are the only two bad numbers for this entire sector from this yearly graph. Now let's move on to the monthly returns graph. Let's see how that graph looks like. So this is the monthly returns graph. The positive bars over, sorry, the green bars over here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. Let's start with January. January, the average yearly returns are around 2%, 1.99%. Below average returns, I would say. Seven positive years and only three negative years. February and March are bad months for this sector with both having negative average returns. February with minus 1.02% average yearly returns with five positive years and five negative years. March with minus 2.03% average yearly returns with six positive years and four negative years. Then April is a very good month for this sector with 7.39% average returns, average yearly returns with nine positive years and one negative year. May, a flat month for this sector with minus 0.56% average yearly returns, five positive years and five negative years. June and July seems to be good months for this sector. As for June, the average returns are 5.48% with seven positive years and three negative years. Whereas for July, the average returns are 5.75% with six positive years and four negative years. August is a below average performer with 1.96% returns, seven negative years and only three positive years. September again a solid month with 5.40% average returns over the last 10 years with six positive years and four negative years. October a below average month with 2.70% average yearly return, seven positive years and three negative years. November above average month with 3.97% yearly average returns with seven positive years and three negative years. And finally, December, the best of all, the best month for the sector with 10.43% average returns, average yearly returns with eight positive years and two negative years. So, December clearly the best month for this sector. So the quick impressions: 1, 2, 3 months with negative average yearly returns. Couple of months with flattish, not flattish, below average returns or average returns, and there are a couple of months which have good returns. April, December, and probably July, June, and September as well. Let's see the key takeaways from this graph. The cheaper months are February, March, and May. So February, March, and May, 3 months with average negative monthly returns, minus 1.02, minus 2.03, and minus 0.56%. Costlier months are April and December. April with 7.39% monthly returns and December with 10.43% monthly returns. So extremely good months. There are a couple of others as well. For example, June with 5.48, July with 5.75, September with 5.40. So these 3 months too are good months for this sector. So basically there are five good months for this sector: April, June, July, September, and December. And finally, positive to negative month ratio is 1.73 is to 1, a good number as such, with which means that There were 1.73 positive months against each negative month in the last 10 years, that is in the last 120 months. So it's a good number for the sector. So most of the things are going for this sector, and most of the numbers and the ratios are good for this sector overall. So that is all from my side in this video. Thanks for watching this video. Like it if you have enjoyed the content, subscribe to the channel, share it with your family and friends, and I will be back soon with another video. Goodbye for now.